Hey, before we dive in, I need to make something super clear. The content in this article is for general informational purposes only. It's not meant to provide legal, financial, or investment advice. Economic forecasting is, well, always uncertain, and any investment decisions you make should be based on your own thorough research, your individual risk tolerance, and honestly, a good conversation with a qualified financial advisor. It's really important to seek out professional counsel from qualified attorneys or financial experts. By reading or listening to this article, you acknowledge that we won't be liable for any direct, indirect, incidental, consequential, or special damages that might arise from your use of or reliance on the information here. This limitation of liability covers any claims, losses, or damages, including, but not limited to, loss of profits, data, or business opportunities. We make no representations or warranties, whether express or implied, about the completeness, accuracy, reliability, suitability, or availability of the information presented. So, any reliance you place on this information is strictly at your own risk. If you have any questions, please contact us via email at info@SiriusFinancialRealty.com. Alright, take a moment to listen and reflect so you don't miss out on what could be your final opportunity to build lasting wealth. This is honestly the last chance to get rich from the US economic recession in the next 6 months. You have less than 6 months left to truly change your financial position. And it's not because someone is threatening you, or because the media is trying to sensationalize things for views. It's because of a cold, hard truth. The global financial system is, well, nearing the brink. What's happening in the US isn't just a warning sign anymore. It's a declaration that a comprehensive reshaping is underway. The US government is in a bind, the budget is depleted, bonds are illiquid, and confidence in the dollar is shaking. Violently and honestly frighteningly. All of this isn't an accident, but a deliberate crisis. It's designed and staged to serve a new financial order. If you think a recession is the time to withdraw, hold cash, and wait for calm waters, then, unfortunately, you'll be left out when the asset ownership transfer game begins. In every crisis, there are two types of people. One loses everything, and the other breaks through. And the only difference between them is knowledge and preparation. In less than the next 6 months, when the recession storm blows through Wall Street and shakes the global market, there will be those who become penniless and those who join the ranks of the wealthy for the first time, just by choosing the right time and the right action. In today's video, I'll show you why the rich always become richer after a crisis. Why this is the last opportunity in a 15-year cycle. And why, if you miss these 6 months, you'll very likely have to wait until 2040 for a similar opportunity. So don't take your eyes off the screen. Comment right below the video. I'm ready to help you get rich if you're truly serious about your own finances. Hit like and share to spread this important information to your loved ones, and subscribe to the Serious Financial and Realty channel right now, because what you're about to hear could honestly be a turning point for your entire financial journey ahead. Now, let's begin the journey of moving through the crisis to step into a more prosperous life. The US government is running out of cash. This is no longer just a warning, it's a reality. As of the first quarter of 2025, the US Treasury only has about $600 billion in cash left, while the total public debt has exceeded the $36 trillion mark. This year alone, the US will have to pay more than $8 trillion in maturing debt, and issue an additional $2 trillion in new debt, just to keep things running. In other words, the outflow of money is way too high, while the inflow is pretty much almost non-existent. Worse still, the Federal Reserve, which used to play the role of buyer of last resort for bonds, can't continue borrowing in reverse from domestic financial institutions through reverse repo. A chart published by the Fed shows that the reverse repo flow has dropped to almost zero, something that's never happened before. And if you're alert enough, you'll realize that when the central financial foundation of the world starts to falter, it's not just a warning sign, it's also a bell tolling for those who are ready for the new game. In the financial world, there's this unspoken rule. Asset prices don't rise because businesses are good, but because money flows in. That's why in 2020, when the pandemic hit and the economy froze, the US stock market still surged wildly. Because the Fed injected money, because of cheap money, and because everyone was encouraged to buy stocks. As a result, those who accumulated assets at rock-bottom prices in 2022, when the S&P 500 index fell by more than 34% in just 2 years, later saw their assets double or even triple. Similarly, back in 2008, those who bought at the bottom not only profited from the stock market recovery, but also preserved their assets when money was printed massively after the crisis. By 2015 or 2016, they had become silent millionaires. Not because they were exceptionally skilled, but because they knew how to wait for the right opportunity. So what about now? Newspapers are talking about the risk of recession, GDP data is negative, and stocks are falling freely. But at the same time, large hedge funds like BlackRock and Vanguard are quietly increasing their investment allocation in Japan and Europe, where they finished accumulating cheap assets starting in 2022. In the US, they haven't returned yet because they're waiting for one final price squeeze, a complete shakeout. What does this mean? It means that if you buy in too early, you might be pulled down another leg. But if you understand positioning and cash flow, this is the time to prepare, not to panic. Where does your opportunity lie? It's not in rushing in and buying immediately, but in understanding who is holding the money, who is leading the capital flow, and where that money will flow in the next 6 months. You don't need to know the exact day the market will crash because, honestly, even the financial elites don't know. But what they always do is prepare. And that's exactly what you need to do too. Don't try to guess, just get ready for the most probable scenario. For now, focus on defense. Don't go all in, don't try to catch the bottom too early, and definitely, don't follow the crowd. Hold cash, but not necessarily in US dollars at all costs. Think about defensive currencies like the Japanese yen, Swiss franc, or even physical gold, and assets that tend to hold their value when the US dollar swings wildly. Keep an eye on where the big money is moving and, don't get caught up in superficial advice. See where the money is actually going. If the financial elites are no longer buying US real estate, don't foolishly rush in. If they're shifting capital to gold, Japanese government bonds, or investing in real estate markets in Southeast Asian countries, then that's where your attention should go as well. Pay special attention to assets that are being heavily sold off, because that's where the fastest recovery happens when the money flows back in. The lower the market is pushed down, the greater the profit will be after the rebound. When you see signals of easing, like interest rate cuts, balance sheet expansion, or even just a policy reversal, don't hesitate, that's your moment to act. Get in quickly, get out quickly, and don't get stuck or be greedy trying to hold on for too long, because this opportunity is not for the slow. The biggest advantage for small individual investors isn't the amount of money in their account, but their flexibility. While large institutions need months to restructure their portfolios, we just need a few minutes to click a button. If you understand this, you won't panic when the market is burning. Instead, you'll calmly stand aside, watch, and act at the right time and in the right direction. In a game where power controls the flow of money, flexibility is the underdog's strongest weapon. Crises don't make anyone poor overnight, they just speed up the process of differentiation. When the market collapses, those who understand nothing will sell off in panic. Those who get it will start accumulating. And when the market recovers, assets don't return to their old owners, they've changed hands. After the 2008 crisis, there were people who were factory workers, security guards, drivers. Just a few years later, they became millionaires, not because they were smarter, but because they entered at the right time, in the right place, and were patient enough to see it through. No matter which scenario plays out, only those who understand the rules of the game, know where the cash flow is heading, and prepare in advance will be able to hold their ground and rise in the next cycle. Whatever happens, one thing's for sure. Cash flow is shifting, and it doesn't go where all the noise is. It moves quietly, ahead of the crowd. Those who follow the cash flow will rewrite the rules. Those who go against it will just get swept away. Big money never moves randomly. It always has a target, a plan, and stays at least a few quarters ahead of everyone else. If you check out the first quarter of 2025 financial reports from the world's top investment funds, you'll notice something interesting. They're no longer interested in US equities, and they're not piling into more long-term bonds either. Instead, they're quietly leaving the storm center and searching for undervalued assets around the world. Take Brazil, for example. The real dropped sharply after a period of monetary tightening. But domestic mining companies are bouncing back, and big names like JP Morgan and Bridgewater Rudder have been quietly buying shares in lithium and rare earth industries since the first quarter of 2025. India is another hotspot, with capital flowing into logistics and AI infrastructure companies, not because of current growth, but thanks to lower capital costs and long-term potential in Europe. Instead of buying up assets in overheated capitals, large real estate funds from Germany, the Netherlands and Switzerland are moving capital into industrial parks in Poland, Romania and Greece, where values are still 30% below their 2021 levels. And while the media is still busy with crisis and political headlines, gold, well, it's a no-brainer. China, Turkey and Singapore are all ramping up their gold reserves on a scale we haven't seen since the 2008 crisis. Not for profit, but to protect assets from global currency devaluation. What do all these places have in common? They were once oversold, big money has finished accumulating, and the media isn't calling them opportunities yet. Smart money doesn't wait for the absolute lowest price, it buys when most people are still skeptical, and sells when the crowd finally believes. So, if you're holding cash, watch very carefully. Don't listen to recommendations. Look at what people are actually doing. Where are the big funds pivoting? What positions are being quietly built? When the media finally starts talking about big opportunities, the real winners have already acted. If you want to follow the cash flow, you don't have to be the fastest. You just need to head in the right direction before everyone else sees the signpost. Just remember, nobody gets rich when the market is stable. It all starts during a crisis. In a game where the big players seem to control everything, small investors might feel like they don't stand a chance. Not much capital, no early info, no analyst teams or banks backing them up. But actually we have a huge advantage: flexibility. The big guys need an entire quarter to rotate their portfolios. We only need 3 minutes. They have to worry about political influence, market sentiment, public opinion. We just need to ask one thing: where is the cash flow going? We don't have to win big, we just need to be right, once at the right time and not make a mistake at the crucial moment. When the market is on fire, we can step aside. When panic sets in, we can get ready. And when everyone else is uncertain, that's when we can press the action button. The real advantage isn't in the amount of capital, but in mindset. Not in how much you know, but whether you have the courage to do the right thing when nobody else does. If you can stay calm in the middle of chaos, not rush when the market rises, not panic when it falls, not get swept up in delusions, not follow advice blindly, and not chase miracles, that's when you truly start to master the game. The market isn't for the quick-handed, it's for those who have prepared. And honestly, if you're still here watching, you're already better prepared than 90% of the crowd. The rest is about taking action, not rushing, but not being late either. Don't let the next 6 months slip by in hesitation and end up regretting it 10 years down the line. While so many are still lost in uncertain news, big money has already pivoted quietly. They don't wait for opportunities, they prepare for them. And if you're holding cash, don't rush to follow the crowd. Watch where the cash flow is heading. Opportunity doesn't come to the fastest, but to those who move in the right direction before everyone else catches on. Wealth doesn't start when the market is stable. It begins with making the right decisions when everything feels chaotic. Don't let time just slip away without taking action. Now is your chance to change your financial position. If you found value in this analysis, don't forget to follow the channel so you don't miss out on the most insightful and timely financial updates. Every click from you is motivation for us to keep bringing you detailed analyses to help you seize opportunities and optimize your financial strategy. Wishing you all good health, happiness, luck, and success in life. And don't forget to like and subscribe so you never miss the latest updates.